two turnaround Nigerian stocks for massive capital appreciation. In this video, I'm going to talk about two stocks that I am actually watching right now. In short, I'm building my position on this stock gradually. So one is going to be free for everyone, which I'm going to discuss extensively in this video. The other is going to be exclusive for members of my community. So this particular video would open your eyes to opportunities you can take advantage of in the market. So if this is the first time you're watching my video or visiting my channel, kindly hit the subscription button, turn on the notification bell so that when I release recommendations like this, you'll be among the first to get notified. So let's move on. Now, disclaimer as usual, the video um, and ideas shared right here are actually based on my personal research and calculation. Please do your due diligence before you invest in this company stock. And then also know that the stock market comes with a lot of risk due to uncertainties, and make sure you vet my recommendation based on your risk profile. So what you will learn in this video, first, you're going to learn why turnaround stocks are the real wealth creation strategies in the market. So if you actually want to build real wealth in the market, you should be looking at turnaround stock. And I think I've talked about turnaround stocks in this video multiple times. And then I'm also going to mention one of the top two stocks I'm watching and buying gradually for long-term gain. When I say long-term gain, I'm looking at a holding period of at least 12 months. So meaning that that's my minimum holding period. And if my gain comes in earlier than that, then I will definitely sell off and look for another stock to buy. So it's good for you to have minimum holding period in your mind. Then I will also look at technical analysis of this particular stock. It should be this stock because I'm discussing one of the two stocks. The second one would most likely be in the community, or I'll discuss it in our next webinar. And then my projection on this company stock. And then we also look at the fundamental analysis and catalyst behind my rally. So this is very important. So it's always nice when I come online again to share new stock picks, new ideas, and also new recommendations. By the way, did you miss the rally on UCAP? I hope you took advantage of the massive uptick on UCAP stock. So let me do a quick review of UCAP before we continue. So this is United Capital stock, which I'm expecting to load on this chart. Yes, this is UCAP. Now, if you go to my YouTube channel, 3 months ago, I mentioned UCAP right here. 3 months ago, I mentioned UCAP. I think when that video was posted precisely, let me see if I can find the date that video was posted. I think it was 3 months ago. Yes, 3 months ago. And 3 months ago should be, we are in July, should be around April, May, April, yes, April, May, thereabouts. So if you go to UCAP, I remember then UCAP was selling around 16 to 17 naira. 16 to 17 naira. And my analysis on UCAP was just on point. So UCAP was selling around 16 to 17 naira, around this region right here. So a lot of people have been complaining, a lot of people have been sending me messages because I had recently recommended UCAP at 24, and then UCAP dropped from 24 down to 16. And I had to release that video to make them see the opportunities in deep and why they should buy more of UCAP at that particular price, because there was no reason for that dip. I did a search, I did my analysis and everything, and UCAP was on point. So in my head, I was like, if there's no issue, if there's no breaking news or no known news, um, no known news, I mean, yes, on why UCAP is down, then it means that some might actually be taking profit because they need cash. So that was where I produced that video and I posted it on YouTube channel. You can see how UCAP had moved from 16 naira to reach a high of 40 naira from that price. This is like a new high. That is what following a good stock will do for you. That's what stock market can do for you if you're able to buy into quality stock. So in this video, I'm going to mention one of the stock, and then I will give you an idea of the second one. If you're a member of my community, you will definitely get to see the second one once it's ripe for entry. And for me, I think I'm building good position in these two stocks because they are turnaround stocks. And if they play out the way I expected, it's going to be a massive return. So let's discuss the first one. Why turnaround stocks are the real wealth creation strategies in the markets? So why turnaround stocks always make most money? Why? Now, turnaround stocks actually align with the buy low, sell high model. Now, what exactly is turnaround stocks? I've discussed that in my video multiple times, and this is not the first time I'm talking about turnaround stocks. So if you're new to this channel, I will drop a link to look at the strategies to make money in the market and why you should pay attention to turnaround stocks. I think I mentioned three types of stocks. I mentioned turnaround, I mentioned growth, and then I also discussed value stock. So I want to show you an example of a turnaround stocks, which I've discussed multiple times in the market. Now, turnaround stocks are stocks that have been beaten down from their previous high, and these are stocks that have experienced massive sell-off. Turnaround stocks have experienced massive sell-off. I don't know why my network is slow today. So they have experienced massive sell-off and then are looking to pick up. Example, this is Losbeja. You can see Losbeja once traded at 68 naira, and then you can see the massive dump from 68 attained in 2013 to reach a low of 14 naira. Then you can see the recovery from that price back. So turnaround is the company is turning around. So that means management is turning around the company's fortune. Now imagine people that have keyed into Jesus Burger at 14 and at 30. And remember how I recommended Jesus Burger at 30, and then you can see riding the stock from 30 into 68 and from 68 to almost 96. I've already sold the stock already. Although I said based on the company's financials, Jesus Burger should not be selling at price less than 100 naira. If the company had to go close to its fair value, first it has to trade above 100 naira. But then it's important you take your profit and move because there's a difference between making money and being right in the market. So this is an example of a turn and around stock. Stocks that have been beaten down and then are turning around. Another example of a turnaround stock, I've discussed it multiple times on this channel, is PZ. PZ was beaten down, and then you can see here, PZ was beaten down, and suddenly we see a pickup. Now, when a company is turning around, it doesn't mean that the company will most likely touch its previous high. Do you understand? The idea is that once you notice the sign that is picking up from that bottom, enter and then cash in and leave. It's not compulsory that you must ride the stock back to the previous high. No, but turnaround stock has a tendency of actually making good money. Why? Because it aligns with that model of buy low, sell high, buy low, sell high. So the low end you are entering is because you feel that the stock has been beaten down enough, and then you feel that the sell volume has been exhausted, and very soon buyers might step in. Number two, companies that are turning their fortune around tend to witness faster share price appreciation compared to stocks at the top. This is very true. When a company is turning its fortune around, price most likely go faster. In short, you will see, and that also aligns with the third model, which is the fact that media tends to cover stocks that had recently reported their first profit in years. So when you see a company that has been beaten down and then suddenly they reported their first profit, maybe after like 3 years, 4 years, media tends to carry such news. And when it carries such news, it also attracts a lot of attention. And that attention most likely translates to buy interest in the market. So that's why you see turnaround stocks recording fast price appreciation compared to other kind of companies. Why? Because this company have been ignored. The market is no longer paying attention to it. And suddenly you just heard a breaking news or saw a breaking news that, oh, company XYZ has just turned profit or reported its first profit in 5 years, in the first profit in 7 years. It has a potential, or it has a tendency of attracting attention, because you then wonder what happened, what happened, and then next thing you see a spike. In short, such kind of company, that first month that you recorded the first profit, the appreciation are always very fast. Why? Because of reaction. You know, People tends to like such kind of company. People tends to say like, oh, good news. And then what happened? Everybody wants to buy into the company just to take their own share of the next good news. So that's why I think turnaround stock record most price appreciation. And this applies to all the stock exchanges, whether it's in the Nigerian market, on the US market, or anywhere in the world. A turnaround stock is a turnaround stock. So there's no difference. Now, let's look at the two stocks that I want to talk about, and then the one I'm going to mention, and then give you an idea of the second one and why it's exclusive for members of my community. I can't just do my research and then I will drop all the stocks right here. This is why people pay to access my premium pick, and I think they need that value more than people that are actually accessing it for free. Now, it doesn't mean I will not continually mention stocks. That might be in one or two occasions, but then I post regular recommendations in the community. Now, top two turnaround stocks. Now, here are the top two turnaround stocks. The first one is Cadbury. I will talk about it and I'll give you reasons. The problem a lot of people have in the market is that once they turn their eyes off a company's stock, and by emotion, they do not like the company because of what is happening. They just assume that everything about the company is bad. That's how I argued with someone on Owando. The person had actually been a core, I don't even know, would I say a core hater, if that word is correct. He doesn't even like Owando at all. And we started arguing from 2 naira. So from Rwanda had rallied from 2 naira into 18 naira, 17 to 18 naira. And he's still arguing. And then I'm like, are you okay? Why would you be arguing on a stock that had visibly and clearly delivered massive capital appreciation when you should be looking at taking your own share of that profit? So that is exactly what people do in the market. And it's a problem. They just their eyes are blinded. And this kind of people, we call them fundamentalists. Why? Because once financial statement is zero, then they knock the stock off. I call them fundamentalists. Why? Because once the stock does not meet their fundamental checklist, once they see a loss, once the stock does not record, they just assume it's not a good stock, leave it. And then, but you will watch that stock go up. And then you are now coming back to the market to call yourself a trader. You can't be a fundamentalist at the same time call yourself a trader. It's not possible. A larger portion of fundamentalists in the market are investors. So if you are going to be a trader in the market, you must love not just fundamentals, but technical analysis. In short, you must learn how to interpret demand and supply. So I'll give you my reason for choosing Cadbury and why I'm building gradual position on Cadbury. I will look at it from the economic perspective. I'll look at it from fundamental perspective. I also look at it from technical perspective, and why this particular stock for me is one I am holding. And then the anonymous stock, which is the one I'll be sharing with members of my community, this stock reported a huge growth in operating profit that's like 5 times the previous number, but the profit was pressured by rising finance cost and exchange rates. That means if you look at their operating profits, these guys are doing extremely well. In short, they delivered massive return. But because of the rising finance cost and exchange rate, bottom line was a lot pressured. But then, if you look at it critically, their core operation is very profitable. So what management is now doing is that they are coming up with a strategy. In short, it's very applicable. I've looked at the numbers, I've looked at everything, and then this looks like a clear path to profitability. And that makes sense for anyone to take advantage of the company stock. In short, I'm not just buying it because of this single reason. But then the technical aspect, which also tells me the interplay between demand and supply, says that demand is actually picking up, says that buyers might be mopping up the company stock, at least for the short to long term, because from the charts that I'm going to share with you, you're going to see how price have played out multiple times. You see a pattern that had played out in the past and how that pattern had led to at least 50 to 50%, average of 50% growth in the company stock, and how that is playing out again right now. So these are the things I'll be looking at on the company stock. So I will share this particular stock with members of my community. And then with CBN, right, you will CBN increasing interest rates, which will most likely help to attract more dollar now, and also with government looking to issue local dollar bonds, dollar bond here, local dollar bond, then I also think that that might also help to suppress exchange rate in the midterm. So, which also is extremely bullish for this company stock. So that means if exchange rate remains stable around 1,500 and this company is able to clear its backlogs, I think it's actually a buy, meaning it's possible they can turn into profits by the end of the year or by first quarter in 2025. So that for me, it's one company I am holding. So these are the two turnaround stocks that I'm paying attention to right now. But then let's look at one of them, which I'm sharing openly right now. Why is Cadbury stock a buy? Why am I buying Cadbury stock? In short, let's look at the recent numbers and why I still chose to buy Cadbury. Cadbury had just released its second quarter results, and the second quarter result for some people looks like it's bad. That's according to most of these fundamentalists. But for me, I don't look at the numbers um, in absolute term. I look at it based on the growth. I also compare it with the previous comparable period. So that way we'll know whether the company did extremely well or not. Yes, so this is Cadbury result. So I'll discuss this shortly. Now, let's look at the reasons I am buying Cadbury right now. Now, why is Cadbury a buy? Now, first, economic event and government policy. In short, there is actually there was this news on Nairametrics, I think less than 24 hours. Yes, 15 hours ago. Yes, this is it here. Yeah, FG considering can see price of Coke, Pepsi, other beverages to crash as federal government suspend sugar tax. So federal government considering temporary suspension of 10 naira sugar tax on beverage manufacturers. So this is it here. So federal government considering temporary suspension of 10 naira sugar tax on beverage manufacturers. So the federal government is currently looking at a temporary suspension of 10 naira tax on sweetened sugar beverages as part of an economic stabilization plan. The Ministry of Finance and Coordinating Minister of the Economy, Mr. Wale Edu, disclosed this when he met with members of National Action on Sugar Reduction, according to the news agency of Nigeria. The minister argued that suspension is intended as a temporary relief with plans to reintroduce the tax once the economy stabilizes. He compared the argument against the SSB tax to those made in the past against tobacco taxation, highlighting the importance of data-driven analysis in shaping public policy. He stated that while the government does not support companies selling unhealthy products, it recognized the need to support business and help people cope with the current cost of living. The minister also emphasized the role of Presidential Economic Coordination Committee. So you can just read up, blah, 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 and see. So I think by doing this, this would actually help this company save. So the money I would have given to the government as tax will most likely be saved. So that is one critical area. So this is one economic reason. This is one economic event or driven by government policy that I think would also help shape the sentiment around consumer goods stock, especially those in the sugar, beverage and food industry, and then Cadbury is actually one of them. So that event would also help Cadbury to save a lot. So if there's any expenses incurred as sugar tax, Cadbury would also be part of the company that will benefit from that particular move. So that's one reason. Second reason is that Cadbury actually announced convertible loan last year. Yes, Cadbury announced a convertible loan last year. Cadbury Cadbury announced a compatible loan last year. Yes, this is it here. Here, I'm taking my time to show you each of these updates. Cadbury gets shareholders know to convert 7 billion debt to equity. So here This is it here. Cadbury gets shareholders note to convert 7 billion debt to equity. So the shareholder of Cadbury, a fast-moving consumer goods firm, have approved the conversion of an outstanding intercompany loan of 7 billion naira, which is $7.2 million, owed to its majority shareholder, and then to equity. This was reviewed at the general meeting. Now, with the shareholders' approval, the loan will be converted into equity by the allotment of 402 million ordinary shares of 50 kobo each. Now, each said shareholder also approved the company's proposal for an increase of its share capital from now that 31 to 1.14. You can see here from now that 39 million to 1.14 billion. In an explanatory statement on the proposed debt to equity conversion filed with Nigeria's Exchange Limited, the company reviewed that between February 2021 and September 2023, Cadbury Schweppes overseas loaned 23 million to Cadbury Nigeria to help settle outstanding third-party loans, which the company had obtained to fund its raw material import. So, just to explain this, now, when you secure a loan, either from your parent company or from a debt holder or equity or creditors, what do you owe the person? Interest. Interest is the cost of borrowing. Now, by borrowing, you incur interest, which is finance cost. Now, if the so-called debt holder or creditor now decides to be your shareholder, is saying, okay, instead of you paying me this money every month or every year for the loan you owed me, why not convert that money that you owe me into shares? So by that, it saves you that burden. You don't have to pay me interest again. So that interest becomes a saving for you. So at the end of the year, rather than accounting for the interest that you're going to pay me, save that money and let me be part of your shareholder. So, and that's a good one. That's a good move for any company because the company is no longer under pressure to pay its debts, right? So that also means that at the end of the day, whatever profit the company declares, that creditor, which is now a shareholder, will now be part of that profit. That's exactly what it means. And it's a good one for any company to convert its loan to equity. So this, I think, is a catalyst. So what I want to see in the company's book is a massive reduction in the net finance cost because when you borrow, you're supposed to pay interest, which is a finance cost. So by converting that debt to equity, we want to see a massive reduction in your finance costs. So that means the money you're going to be paying your creditors as interest should reduce significantly. And when it reduces, then your profit should also go up, or you should also help to reduce loss if you had incurred loss in the previous year. So the effect of this, I'm going to show you one after the other in the books of Cadbury. Now, number three is the improved Q2 financials and also 6 months results. So now let's start by looking at Cadbury's book. So let's start with the recent one. This is the Cadbury Q2 financials. Just released this, I think, a day or two. Now, the Q2 result is the April to June 2024. So we're looking at April to June 2024 against April to June 2023. So I like to look at the quarterly result before I look at the 6 months. Because by looking at quarterly, you can see recent events and how that had helped the company's financials. Now, look at the quarterly result here. The company reported an increase in revenue from 19 billion to 27.7 billion. So 27.7 billion minus 19 billion, that's 8.7 billion. So 8.7 divided by 19. So that's like 45% growth in revenue. There is no positive growth in a company if it's not driven by revenue. When a company is recording growth in profit and you can't see that growth in revenue, that's a problem. So first thing you must see in a company, first thing you must watch out for in a company financial statement is the revenue. So this is 47% increase in revenue, which is quite okay. But then because of the rising cost, input cost, this was actually pressured by almost 100% increase in cost of sale. You can see here from 11.8 to 23. So that automatically means that Cadbury incurred more costs, and this has to be looked into, or else it might be a problem. So because of that, Gross profit was a little bit pressured down from 7.2 to 4.5. So from 7.2 in Q2 2023 down to 4.5 in Q2 2024. Now let's continue here. You would also see other income. There was other income. I think there was a loss of 3.3 billion in 2023, but that was narrowed down significantly to 200 million. So, which is a massive improvement. So, we would also look at these notes to account to see why. Then, selling and distribution expenses 1.8 to 1.9, 544. So, still within range despite the increase in inflation rate. So, company is still able to manage its selling and distribution expenses, including admin expenses. So results from operation showed an increase. This is a result from operation, which is profit from operating activities from 1.5 to 1.9. So the major number that accounted for this was this other income, which was narrowed down significantly. So 1.9. Now, look at the net finance cost of Cadbury. Look at the net finance cost. This particular net finance cost is what the company should be paying creditors right here, right here on this. So assuming that this particular debt holder or this debt holder, which is the parent company, is still carrying that particular amount in Cadbury's book as a loan, then you should have seen this number rally higher, far more than expected, because of the exchange rate that depreciated from last year to this year. So that also would have also pushed the number higher, because if you look at rate depreciation from last year to this year, we've seen almost 30% or 40% plus increase. So that would have also added to the woes. That would have also been a problem in Cadbury book. But for converting that loan into equity, that helped to support this line item, which is why you're seeing a massive reduction from 20 billion in second quarter 2023 to 5.3. So this actually helped to improve on the company's financials. And this also helped save the company a lot of money. So meaning that the company exposure to net finance costs, which is as a result of rising interest rate, loan, and all that, was reduced from 20 to 5. Now, because of it, the loss before tax also, you can see here, the loss before tax also reduced significantly from 19.4 down to 3.4. So one of the major reasons we saw this reduction is this net finance cost of almost 15 billion. 15 billion. So imagine that the company also incurred an average of 20 billion right here. This would have increased massively. So this reduction in net finance cost is actually showing because of the debt conversion, because of the convertible loan. And then you see income tax credit down from 1.4 down to 1, and then loss for the period, you see here 17 and then 2.3. So you can see here from 17 to 2.3. So loss for the period narrowed significantly from 17 billion reported last year in the same period down to 2.3 billion. Now, some people will say, especially fundamentalists will say, oh, the company is at loss, I'm not buying. But as a growth trader, as a growth investor who is in the market to trade, I am looking at growth. I'm not looking at absolute figure. I'm looking at growth. Was there an increase? Was there an improvement? So the question you must continually ask yourself as a trader is there an improvement in these results? Because it is actually an improvement that you are watching. You are trading companies that are improving on their financials, not companies that have reported loss or profit. A company can report a loss, and that loss will be an improvement compared to the previous year. A company can report a profit, and that profit will be a decline compared to the previous year. So don't just look at the absolute figure and say, oh, this is a profit, this is a loss. Pay attention to the growth. Look at the improvement compared to the previous year. It is that improvement that you are trading, not the absolute figure. So on Calbit Financials, we are seeing an improvement in the results compared to 2023, from 17 billion loss in second quarter last year down to 2.3. So if in third quarter, we also see another reduction in net finance costs, that should also help to improve on the company's bottom line. So we are watching, and that means this guy might be on a path to profitability right here. So if Cadbury is also able to manage its cost, I think one of the reasons why this didn't swing into profit is the cost of sales that went up by almost 100%. So imagine that the company is able to manage its cost of sales maybe from 11 down to 15 or 11 down to 14. This would have been a profit. So Cadbury actually has a job to do when it comes to managing its cost of sale, because that is what it needs to quickly swing into profit. For me, I see a lot of improvement because of the reduction in net finance cost, and that would also help to grow the company's bottom line. Now, if you also look at the 6 month results so far, you see from 19 to 54, sorry, from 35 to 51. Here you see from 10 to 9, same cost of sale from 25 to 41. And then result from operation, you're seeing from 6 to 4. You can see here from 6 to 4. Other income that June was in profit, and then here we're seeing 215 loss. So the company needs to work on this. And then you're seeing 3.3, 3.3, 800, 1.2. So a slight increase in both marketing, and that's selling and distribution expenses, and also admin expenses. And then 6 month time, we're seeing operating results 6 billion down to 4.7. So and then if you look at the loss for the period too, now from 14, you can see here, loss from 14.5 down to 13, and then that's loss before tax. And then loss after tax is from 14 down to 9. The company is enjoying what we call it tax credit. Tax credit. So that's why the loss narrowed significantly. Then you're seeing from 774 kobo to 426 kobo. So for me, I think that there's an improvement in the company's financials overall, and then that most likely would probably make me to put the company on my watch list. So, but then I'm not the only one trading the stock. So because I'm not the only one trading the stock, it's important for us to look at the technical side of Cadbury, because while you are here taking decision thinking this company result is bad, what happens? What if the company share price rally higher? Why? Because of the sentiment behind it. So it's important for you to look at the sentiment behind the company stock. So let's look at technical analysis, how Cadbury price is emerging from a sell-off, and then the key levels and projection, as well as the risk to reward of Cadbury. So let's look at Cadbury on charts to explain this whole thing. Yes, this is Cadbury on charts. Now, it's important for us to look at key level. Now, why do I pay attention to charts? It is because I'm not the only one trading the stock. So with charts, I can read the mind of other traders in the market. I can read the mind of other investors. I can see what people think about the stock in the market, because by that it will probably reflect, because the price of a stock, the trend on chart, will reflect in other investors' mind or emotion towards that company. First thing, let's establish the fact that Cadbury has been beaten down from a high of 86 down to a low of 8. You can see right here. So this is an example of a turnaround stock. Now you see, first we want to see a massive sell-off, and then you are seeing consolidation. The company stock has been consolidating since 2017. You can see right here. And then with major key level established. This is the first key level right here. You see another key level, you see one, and then you see one right here. Now, if you look at Cadbury stock, I marked what I call my trend line. You can see how the company has been respecting this trend line since 2022, of April 2022. You can see here a rally to this key level, which was tested right here, and a bit of a close range here. So tested 1, tested 2, tested 3. And then you can see that each time the company stock pulls back, pulls back, pulls back, it tends to respect a major trend line. Let me reduce it to a weekly chart. So you can see here, each time the company's stock pulls back, you can see how it's respecting this major trend line that started in April. First, we saw a rally from 10 to 17. That's 70%. Pull back to this trend line, and then you can see how it played around this trend line, and then this is a fake breakout, fake out. And then from here, it rallied from 11 back to 17, which is also more than 50%. So that's like 6 divided by 11, that's almost 54%. Then you see another touch again for the second time. You see here, and then from here, it peaked from 13 to reach almost 31. You can see here, that's almost 100%. And then drop back. You can see how it's respecting the same trend line that was established in 2022. So it dropped close to this trend line means that this particular stock is being watched closely around this range. And you can see a gradual recovery from here. Now, this was around 15 Naira. You see a gradual recovery into 18 Naira. So with this trend line being respected, first time, second time, third time, and then the fourth time, we'll most likely be seeing a gradual recovery on Cadbury. So for me, that's why I'm mopping up Cadbury um, gradually. And then I have my risk level below this trend line, and my risk level should be sitting around 15 to 15.2, meaning that if Cadbury drops below 15.2 or 15 Naira, I would sell off my equities. But as long as Cadbury is above the trend line and this particular low risk level is still in play, then why am I selling Cadbury? No reason. I should probably hold on because each time it drops close to that trend line, we've seen significant rally, capital appreciation like here. So if all that we've shared so far will play out from the technical perspective of how government is about to suspend sugar tax and the effects of the convertible loan, which is a massive reduction in the net finance cost on the company stock, as well as the improvement in Q2 financials. When I say improvement, I'm looking at the narrowing down of its losses, as well as the fact that price is emerging from a sell-off, then it means that this guy might actually be looking to trend higher based on demand and supply. Remember, I am not forecasting. I am looking at the power of demand and supply, power of key level. Now, look at how Cadbury is trending close to this key level right here, 17, 17. So a comfortable close above this region might open the tap for a rally at least into 24, 25, 26, 27. So most likely 27 to 30 Naira region. So from here down here is around 15%. So if I'm looking at 30% return, so I'm probably be watching at for 27 to 30 Naira region. So that's my projection on Cadbury based on key level analysis. So this guy will most likely be testing previous key level of 27 to 30 Naira region. So let's look at the trade idea. Now, first one is a low risk entry. My best low risk entry on Cadbury is anything below 18.5. 18.5 is a perfect bargain on Cadbury. And then my risk level is around 15.2. And then my 15.2 was strategically chosen because it should be below, around this low here and below the trend line. So if Cadbury drops below this trend line, then I might sell off. But as long as price is above this 15.2 low attained and around the trend line, then it's a hold. I'll continue to hold this stock. Then my take profit region of 30% is around 27 to 30 Naira. So I'm looking to ride this guy into 27 to 30 Naira. But then remember, the direction of this particular stock depends on the sentiment in the market, depends on the Q3 results. So if we continue to see a noticeable reduction in the net finance cost of that company, then let's look at the Q1 results of Cadbury. Let's look at the Q1 result of Cadbury here. Now, look at the Q1 result of Cadbury. This is April to June. No. Let me extract. This is Q2. So let me extract the Q1 results. I want to look at the net finance cost too. Okay, this is period ended March 2024. March 2024. Yes, so look at net finance cost of Cadbury right here. So you can see here, we saw net finance cost. So note 7. Let me look at note 7, net finance cost slash income. Note 7, net finance costs slash income. Note 7, Okay. So look at this here. This finance income, this finance cost here. So you can see the company recorded, you can see here 13.3, 13 point. So I think that the net finance cost is starting to take effect from Q2. From Q2, you can see here, even in Q1, we saw an increase in net finance cost of that company. So I think the convertible loan started taking effect in Q2. That's why we saw a noticeable reduction. Like here, if you look at the 6 month period. You can see 6 month June 2024 is 18.6. 6 month June 2023 is 20. So I think it started taking effect in Q2. And then we see based on the Q2 number, 3 months, from 20.9 down to 5.3. So if Cadbury continues to slow down its net finance costs, that should also help and maintain the increase in revenue. But then they need to also manage their direct costs. You need to also manage their direct costs. So I think that should also help to push the company's financial higher. So this is actually my projections on Cadbury and what I think would likely happen to the company's stock. So this is how I am trading this particular turnaround stock right now. I'm using the combination of economic events, technical, fundamentals, and as well as the recent company specific news, which is the convertible loan, to take my buy or sell decision. I have not forecasted Cadbury. I've only tried to connect the data together, connect the event, and are able to come up with my buy decision right here on this company's stock. So if this video makes sense to you, kindly hit the subscription button, turn on the notification bell so that when I release interesting videos like this, you'll be among the first to get notified. And if you have any comments on Cadbury, feel free to use the comment section. Let's discuss. And I also like to hear from you. Thank you.